Hey everyone, I wanted to give you a little insight about what the heck has been going on with this rate market. What everybody is talking about is the Fed announcement yesterday, how interest rates dropped, and everybody's really excited about it. The federal funds rate does not have a direct relationship, though, with fixed mortgage rates. And this is what I wanted to show you. So, what I'm looking at right now is the bond market. The reason why mortgage lenders monitor the bond market is because the price of bonds going up and down is actually what causes the mortgage rates to go up and down, specifically fixed rates. ARMs have a different process. So there's an inverse relationship, meaning when the price of a bond is high, like here, this is the price. So the price column is over here. This price is at 102.2. When the price of the bond is high, interest rates are low and vice versa. So what we've been seeing here, this timeline is August 20th. We saw an increase in the bonds, which is why everybody in the market and the news and refinancing was a good idea because rates were low. What nobody is talking about is that basically ever since Labor Day, we have seen a decrease in these bond prices, and then last Thursday, September 12th, look at this red candle. That went all the way down to 100.56. That was the ending day price for this bond. Whereas up here, we were at 102.13. What does this mean for you? It means that in these 9 days, a potential buyer just lost about 5% of their purchasing power because of this big change in rates. So to put that in perspective, a $500,000 sales price, that same client or seller would have to drop their price by $23,000 to recoup this change in the market. That's important for you guys to know because that purchasing power, if they were pre-qualified during this time period, a loan officer has to reevaluate the pre-qualification. Same thing if you're a listing agent, you're going to want to talk to that lender if you're accepting an offer to make sure that that loan officer has rerun numbers based on where rates are now. Now, yesterday, we all know that the Feds announced that they were going to decrease the federal funds rate. What kind of impact did that have? Well, we see a little bit of an increase. Yesterday, the bond market ended at 101.28. And so I'll be looking to see how the bond markets perform today and tomorrow to see if we see this line continue upward. If so, just know that that's going to put us probably back to where they were at the end of August. If I expand this out 3 months, take a look at this chart, you'll see that the bonds were down here towards the beginning of the year. Then at the end of July is where we saw this big increase in the price of bonds, which is what caused the mortgage rates to drop. And then they continued, which is why there's a huge refi boom. Lots of people were refinancing. That was the right time. But look, this is September 12th. So stay informed. Make sure that you're pre qualifying your clients. If you're listing agents, make sure that you're having good conversations with the lender before you accept their offer. If you guys have any questions, let me know. I'll be keeping you guys informed over the next few days. Hopefully, we see this line go right back up.